What up, Hyperchange? Welcome to another episode. Today we're talking about Tesla's Q3 production and deliveries. These are hot off the press, announced this morning, is the most important update we get from Tesla each quarter. How many cars did they build and produce? So I'm gonna go through the report, give you all the facts, and then go into a little bit of my analysis. So let's get right into it. Here is the press release. Tesla for the third quarter produced 80,142 cars, a 50% increase from Q2. 53,239 of those were Model 3 vehicles, almost doubled Model 3 production quarter over quarter. Additionally, they built about 5,300 Model 3s in the last week of the quarter, so showing that in burst production rates, they can actually hit over 5,000 Model 3s a week. Now, you may be saying like, oh, if I divide 53,000 by the 12 or 13 weeks in the quarter, I'm getting a little over 4,000 cars produced a week. And yes, that is the average weekly production. Remember, there's time for shutdowns, but the burst production rate is probably somewhere around 5,000 to 6,000 Model 3s per week. What's even more impressive is the company was able to build 26,903 Model S and X vehicles, actually slightly up quarter over quarter. So despite having this tremendous Model 3 ramp, they're still building Model S and X, and it hasn't impacted that production. Awesome news from Tesla. In terms of deliveries, now this is even better than I was expected. If you follow Hyperchange on Patreon and you get the newsletter, you know I was predicting about 80,000 cars produced and 80,000 cars delivered, but Tesla actually came in with deliveries of 83,500. 55,000 of them were Model 3, 14,470 Model S, 13,190 Model X. This I thought was incredible because, as you know, delivery logistics hell is what Tesla was going through at the end of the quarter, this massive frenzy. Now that they had figured out how to build the cars at a rate of 5,000 per week, how do you deliver them? And with an incredible push, thanks to some awesome volunteers in the Tesla community who helped out, Tesla was able to deliver 83,500 cars. I mean, this is incredible growth for the company. To put things in context, last quarter they only delivered just over 40,000 cars. I mean, if you take a look at this chart, the entire chart of Tesla's quarterly deliveries almost goes out of whack when you put in this quarter because it is so much growth. 105% growth sequentially for deliveries for Tesla. I mean, this is a business that's not doubling year over year, it's doubling quarter over quarter. And of course, they're going to have growing pains when you're growing this quickly. And year over year, if we look at the growth in Tesla's deliveries, the company is up 219%. Growth in deliveries year over year. So Tesla, it is one of the most rapidly growing companies on the face of the planet right now, despite doing tens of billions in revenue. If we take a look at just Model 3 sales by quarter, you can see the growth here has really been phenomenal, almost tripling sales quarter over quarter here for the Model 3. And now for what I'm thinking for the annual production run rate, this is just my personal estimate. I'm assuming that Tesla will build deliver about 250,000 cars this year, up from 103,000 last year. That's 143% growth this year in terms of deliveries. Now remember, Tesla delivered 83,500 cars this quarter. That's already a run rate of 334,000 cars a year. So I think we're gonna see Tesla's deliveries grow to 400 or 500,000 in 2019, but more on that later. So now let's go to the report and see if there's any other important tidbits. One thing I thought was interesting is they note that, they had this incredible quarter for Model 3, but they're still only selling the extremely high price variant. They're still only selling it in North America. You can't even lease the car. Shorts will say like, oh, they're juicing these high margin deliveries, like they're just doing this to show a profit this quarter. And yes, that's kind of true. But the flip side of this is they actually had 50-something thousand people willing to shell out just in the North America for this incredibly premium Model 3, and that alone is an amazing fact. I mean, to have more people paying more for the car than you thought is a great thing for margins, and that is what's going on here at Tesla. Additionally, in terms of Model S and X, demand for those remain high. They continue to guide deliveries of about 100,000 for Model S and X for the full year. I think this is awesome news, and I will say that, Model S and X deliveries, if they come in at 100,000 for this year, are going to be about flat from 2017, and that's partially just because they're constrained while ramping Model 3, but I also think there's a huge upgrade for Model S and X in the works. I made a whole video about this, the new 2170 battery cells, new HVAC system that's in the Model 3. I think these things are going to make their way into the S and X. I thought it was going to be 2018, but looking like 2019, and I think a refresh of those cars could mean, more range, potentially almost 400 miles of range. And just a little bit slicker, and I think that could actually potentially stoke demand to closer to 150,000 units a year, a Model S and X, but that's something coming further down the road. Additionally, the other biggest part of this report is they note China, that typically they have to pay this 15% import tariff in China, but now with the recent trade war, the import tariff has gone to 40%, so that is a huge headwind on their growth. And then if you also take into account the fact that Tesla's building all of these cars in Fremont, California, and shipping them to China, you add in the 40% tariff with the 15 to 20% shipping costs, you're looking at a 55 to 60% cost disadvantage for Tesla in China. And because of this, they are actually announcing here they're accelerating the construction of the Shanghai factory, which they expect to be a capital efficient and rapid build out using the lessons learned. Once again, Tesla, the pace of innovation, the failing, the iteration, the learning, the improvement is what this company is all about, and they are leveraging everything they've learned with this Model 3 ramp to build a next generation factory in China that is going to be way more efficient, cheaper to build, produce cars more profitably, and it looks like they're stepping the foot on the gas with that initiative, no pun intended, because of this import tariff situation. So great news there. Where are they going to get the money to actually build it? Where are they getting the money to do this? I don't know. That's another question. The last little tidbit from this is that production has been stabilized, and now their real challenge once again has been deliveries, and they're focusing on direct deliveries to customers, which it looks like they're going to double down on. I think this is an awesome method. It's really coming full circle for Tesla to be this internet first sort of car brand where they literally deliver the car straight to you. I can imagine a future with all these autonomous Tesla semi-trucks driving around the road, dropping Model 3s and Model Ys and stuff off. So I love this initiative just in the long term for Tesla to streamline the delivery process. They actually did include a note, our net income and cash flow results will be announced along with the rest of our financial performance when we announce Q3. So they don't actually reaffirm positive cash flow or profits. And I've seen bears already spin this negatively. They're just basically saying we're not going to comment on financials. They probably don't even have the final numbers yet, so I think this totally makes sense. And I also would like to point out that Tesla's actually profitability in Q3, although they've said they're trying to do it and have guided for it, has always been a huge stretch. They're going from losing $621 million in EBIT last quarter to trying to actually make a profit. That's a $600 million swing. So I'm personally not too hung up on whether they're actually able to do a profit or positive cash flow this quarter. What I'm really looking for is an improvement. If they can get anywhere near break even, I think that is a phenomenal thing for the company. Tesla is still very early in its business model overall. The Model Y, the solar roof, ramping their battery business. I think we're still very early in seeing Tesla's product lineup mature, and they're taking on a lot of R&D expenses and administrative expenses to build out future product lines. Their cost structure looks bloated. They're not at maturity. I don't think they should be forcing themselves to make a profit now, and that's why what I'm really looking for when the financials come out is just an improvement and a step in the right direction. Model 3 gross margins are still not where they're going to be at a normative state, so we don't even know how profitable that program could be. So I think it's just all about taking steps in the right direction, and I think even if Tesla doesn't hit a profit this quarter, but they are close, that's going to be tremendous progress and set them up to potentially, or almost surely have a profit in Q4 if they can keep up this level of demand. And now you might be asking, why is the stock down? As I'm making this, the stock's down about $304 per share. I think the biggest reason is this news actually isn't really a surprise. Electrek has basically been leaking the production numbers. They released yesterday that Tesla would be building about 80,000 cars in the quarter. That was dead on. So everyone sort of already knew the news. Additionally, there was a bunch of sort of snafus this morning with different headlines. And shout out to Dave Rand, Patreon producer, for pointing this out to me, where headlines were changing, saying that Tesla had missed their numbers, they had missed guidance, they had missed production, when they actually didn't miss their estimates at all. Tesla's guidance was to build 50 to 55,000 Model 3s. They built 53,000 something, and their delivery guidance was to deliver slightly more than that. They delivered about 56,000 Model 3s. So Tesla actually beat their own guidance, and Tesla almost never does this. Tesla is famous for putting out targets that they can't hit, that are impossible. They put out another impossible target in Q3 to build 50 or 55,000 Model 3s, but here's the catch. They did it. And so so anyway, that wraps up, my summary of Tesla's Q3 in production deliveries. 83,000 cars built, 83,500 delivered. Incredible growth, more than 100% sequential growth in deliveries. It's almost, the only negative I can even find in this, it's almost irresponsible how fast Tesla's growing as a manufacturing company. I think the customer experience is suffering a little bit because they're trying to rush out so many deliveries out the door to hit those profitability targets. That's the only thing you could really grill them on. But other than that, the execution has been phenomenal. When you hear people saying Tesla's way overvalued compared to every other car company who's selling millions of cars, Tesla's only selling whatever, well, look at the pace of growth. Look at the derivative. Look at how fast things are changing. This chart is, if this chart doesn't make every single automaker incredibly scared and be rethinking their business model, and be rethinking the impact the Model 3 is having, then I think their heads are in the sand, because this is the data that shows that Tesla is disrupting the whole industry. This is the reason why they're valued as a growth stock, because they are growing more than 100% quarter over quarter. No other automaker is growing. Almost all of them are actually shrinking because Tesla's taking market share. That's the difference. This is the data. Would love to know what you all think in the comments below. Also, huge shout out to our Patreon supporters and producers. It means a ton to support the show. Definitely check out our Patreon page if you want to learn more about that. Anyway, I'll see you guys next time. Peace.